Hey everybody, so this is going to be a weekly overview video, and I'm not going to talk too much about the news for next week, but there is a lot of data that's coming out. So just to make it easy and for your convenience, I have this nice little Excel sheet that you can download in the description down below. If you do enjoy these, they do take me a little bit of time, so if you could give a like, a comment, or a subscribe, I would greatly appreciate that. And once you download this, just follow me along on some of these technicals. So we're going to jump straight into it. So, starting with Tesla, I mean, today we saw something that I know a lot of Tesla investors didn't want to see, and that was that break underneath 700. So we are above 700 in the after hours, and I swear to God, they timed this information so perfectly. They start talking about a 3-to-1 stock split and whatnot. But, you still got to be very cautious here. This could just be a trap. So if we look back in February, we can see we hit 700 smack dab right there. And in the last few days, we've just been messing around with it. Finally, today, we went underneath it. If you look at today's candle, it's kind of like an indecision candle. It wasn't sure if we wanted to just tank it or just rally off this point. But the key being we closed underneath 700. Now this doesn't mean that it's all doom and gloom from here. I mean, you're going to want to see multiple closes under 700 for us to feel a little bit more confident that this is going down. So let's just look on a lower time frame here. Let's go on the 1 day. Now, here's something interesting on the 1 day. So we had this massive gap down. Immediately in the AM, we filled that gap up. And then we started selling off. So to me, that's definitely some pretty bearish price action right there, just seeing this. So this is literally just bulls getting trapped on the gap up, and then bears just completely taking advantage, selling it all the way down to here. And then, they tried to attempt to get it back over 700 near the end, but massive sell off. So yeah, clearly got rejected right there. So overall, I'm feeling a little bit more bearish on Tesla, but we did get that 3-to-1 split news. So it's kind of, well, we'll see. Like we're gonna want to see multiple closes underneath 700. That's basically going to be the main idea here. Now, if we go on, let's see, this 1 month time frame right here, you can see clearly broke underneath this trend line. You can see once that we actually broke underneath this, it's been a strong sell. So that's what we got on Tesla. If we're looking at the moving averages, still far below a lot of them. And with the 20-day moving average, you could see that once we broke underneath this 20-day, you could see that we really sold off here. So ideally, we would want to get back above 715.90, which is the 20-day. And then, maybe this has a little bit leg, like maybe this has a little bit of legs. But we also want to get above this trend line. So this trend line right here could act as future resistance. So do keep that in mind. Now with Apple, I mean, I got so much technicals going on here in Apple, but one thing is very, very clear. We left this massive gap here. So, a lot of things can happen. We could have some serious, serious swings. Um, so just going back on the risk ranges, if you're looking at Apple, our lower risk range is right around 130.83 and the higher risk range is 143.43. So let's go ahead and look at that. So options market is saying right around 130.83 is going to be our low range. And I would, yeah, I'd agree with that because my line right here is around 131, which is essentially this area where we've been gapping around. So as you can see, we've been gapping around this 131 area. So this could act as support. Now that's still quite a ways away, and we still have this gap right here. And the upper range is 143.43, which is right around here. So, I'm not seeing too much significance in that. I would say the upper range is probably more likely to just be this gap fill right here, right around, what is that? Like 142.64, maybe a little bit more. Maybe we could come all the way up here to like 143.20. So that would be what I would think is the higher range here. So this is, if we do see this gap get filled, be very, 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 very cautious. This could just be a complete bull trap if we do get this filled. So it could be just like what we saw in Tesla right here on the 1 day. So these kind of price action is very scary, where you just see this massive gap down, massive gap up, and then sell off. That could entirely happen on Apple. So do watch out for that. On the Qs, we have that same gap. I mean, this gap is probably going to be in a lot of charts here. So when we're looking at this gap right here, we're essentially looking at, that's right around like 299-ish is the top of that gap. The bottom of this gap is right around 294.39-ish or 294.84-ish. So right now the options market is saying 368 could be the higher range. So 368. Yeah, so I would say that's pretty much this gap fill right here. So it's basically saying this gap fill is about the higher range. And the lower range is 376.51. So that's all the way down here. Notice I have to zoom out. So I would say the lower range is basically pretty close to this old gap fill area. So this is where I think the risk to reward can get really, really good for the Qs. If we fall all the way down to this gap zone right here at 375.16, I think the risk to reward for calls is very good here. And it's going to be very, very obvious where, you're going to have to get out of these calls. If we break underneath this, then yeah, you're going to want to get out of those calls because there's not a whole lot of support underneath. But the reason why I say that this is a very good area to potentially get a call is because, look, we could fill that gap and we'll also hit this bottom trend line at the same time. So in my opinion, it could go all the way down to here and then you could see the next leg up. So this could be like the next bear market rally. Who knows? But, every single time we have basically hit this, we saw that bear market rally. So I would expect that again, maybe right around here. So that's that 375, 376-ish area. So right around there, that risk to reward is looking very, very good. And yeah, we could definitely fill this gap too. And I think the most likely time we could fill this gap is probably right around the FOMC meeting, which is going to happen on Wednesday. So on FOMC, I've seen some crazy, crazy stuff where, Jerome Powell says like one thing, everybody's like, oh my gosh, bullish, bullish, bullish. And the next thing you know, we see this massive, massive, massive candle, but that candle is just a gap fill. And then you see this massive, massive sell-off follow after. So that is when I think that we're most likely to fill this gap if we do fill it. And if not, then, well, I don't really know when the heck we're going to fill that. Maybe the next time we could fill it is if we make it all the way down here and we have that rebound rally. So that's kind of my thoughts on how this gap fill could play out. Now with SPY, as you can see, we have that same gap fill area right here. Now I just want to go on this lower time frame right here. So I had this line drawn out yesterday for you guys. And as you can see, knifed underneath it. So now, what is the options market saying for SPY? It's saying that we could fall as low as 376.51. That would be the lower risk range. So let's see, 376.51. Where is that? That's like right around here. And it's saying the higher risk range is right around 403.09. So slightly above this gap fill. So it's basically saying the top of this candle right here. As you can see right here, this one. So you know what? I kind of would disagree a little bit. I would say, we could probably fall as low as this area right here, which is 373.23, which would be this zone right here where you can see this little gap. You can see that support. So this was prior resistance, prior support. You can see it has these gaps right there. And you can see it also lines up with this downtrend line as well. So I do think that that would be like probably max pain right there. And right here, I think could be a likely small bounce maybe right around 380. You could see support right here, prior resistance right there. So I do think that this could be an area of small support. Maybe we just have this little rally. Who knows what it could be? It could be like a bear flag. I don't know. And as far as this gap fill, same thought process. I think this could happen right around FOMC. And if it doesn't happen around FOMC, then I do think it could happen if we rebound off this level right here, right around 373-ish. So that would probably be my next bear market rally scenario. Now over at IWM, same deal. So the top of this gap area is right around 183.63. The bottom of this gap area is 181.35-ish. What is the options market saying? It's saying that the weekly risk range could go as low as 171.76. So that is quite a ways away. So that's right around there. And you know what? I could see that. I mean, we got this tiny little support right there. Let me zoom out. This is going to be kind of sad. How far do I have to zoom out? Okay, yeah, I could see that. So as you can see right here, this was this prior little gap area, as you can see. So it's basically saying we could come all the way down there and fill that. Well, I guess we did right here. So yeah, I guess we could basically do something close to like a double bottom maybe. And then it's saying the top range could be 185.42. So it's saying slightly higher than this gap fill area. 185.82. Yeah, I would kind of disagree with that. I feel like it wouldn't get that high. I could be totally wrong though. I mean, I would think it basically just gets to here and then it fades off. But you know what? That's my opinion. I've been wrong plenty of times. And I do want to note, broke underneath the 20-day right here. And we did try and retest it, as you can see. And lastly, I want to cover the VIX. So as you can see, the VIX is in a very interesting place. So I talked about this bounce the other day. Now we have this massive rally. And then look where this wick is. The top of this wick is actually this trend line right here. So it hit resistance and then it faded. So what happens after this? I mean, we closed above the 20-day moving average. And for some reason, Weeble's kind of glitching out with the moving averages here. But this green line is the 20-day moving average, or the 50-day moving average. And it's at 26.57. So we are kind of in this little wedge right here. If we break up to the outside, then yeah, expect stocks to be screwed big time. But I mean, right now it's pretty crazy. So it's price action could get a little bit tighter on the VIX, and then we could see that breakout. Or maybe we could see that break down. Maybe Jerome Powell says something really, really great. But you know what? I'm kind of more realistic and I'm feeling like he won't. So I hope you guys enjoyed this video and definitely do that like, subscribe, comment, or whatever. And make sure you download that Excel sheet. It'll be very useful for you guys just going into next week and seeing what time and what event is taking place that day. And I hope you guys have a great weekend. Don't stress out too much.